Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach the art of analysis and trading at Trading University. First chart we'll take a look at will be what we call our flocking chart. A little bit different start to the day. Take a look at that. You can see it has several different markets on there. The yen in red, gold in yellow, the euro in blue, Swissy in black, and the Aussie in white. It really demonstrates, well, the name flocking says it all. You can see, much like a flock of birds, at one point the Swissy was the leading market. That dropped off, take a breather, and the Aussie becomes the leader, and that drops off, takes a breather, and the yen pops up, and then gold, etc. What's important to see about this chart is the overall movement of the flock, basically the overall movement of those markets. And just like so much of our analysis, how we would determine the direction, it'd be based on that simple pattern of higher highs and higher lows. Likewise, it's important to see the big picture. It's dangerous to look at an individual market. You take the Aussie, for instance. Aussie now has a pattern of lower highs and now lower lows. However, in the larger picture of the flock, that's not necessarily bearish, right? So you got to remember that. Essentially, we would consider that the flock itself, the direction of all the markets, has changed when you have the majority of them exhibiting a bearish pattern, lower highs, lower lows. In this case, you don't. You still have the top three. You have the majority of those very definitely exhibiting bullish behavior. So overall, that bearish dollar trend, likewise the bullish for the currencies, and by the way, that's yen dollar, gold dollar, euro dollar, Swiss dollar, Aussie dollar. It's just easier to have them all against the dollar, and you get that beautiful the picture of the flock or the fleet, you could call it. But as the old saying goes, it takes a long time for the fleet to turn around. Similar behavior with the flock. I like the flock analogy as you can see a leader drops off and then another leader picks up, just like a flock of birds, right? But keep that in mind. Keep that overall picture that yields in mind when we're going over the individual markets now. Here's our good friend the Aussie, and there's a nice depiction of the different patterns at play here. Now you may initially see a weakness in the Aussie. No doubt about it. You've spilled off. You sold off pretty hard, pretty violently also. But on the other hand, look at that. You're right on top of support. That's significant support. That's very definitely a level that we would watch for a potential swing trade long in the Aussie. So no doubt about it, your shorter time frame patterns are lower. As a day trader, you'd still be selling rallies in the Aussie, but beware, you're right on top of support, and that's a level that we would watch for a swing trade. Here I'll drop down to a 4-hour chart, and you can already see the market itself, momentum starting to die out there. Look, you have a little inside green candle there. We'll have to watch that. Hasn't given a signal yet, but you can see it potentially stabilizing, albeit end of the week. We'll have to see. So definitely a level to watch in the Aussie right there for a swing trade long. On the other hand, short-term momentum definitely down for the Aussie. Next market, take a look at the Swiss franc. Dollar Swiss pretty tough. Look, it's holding that significant level right there. Let me pan out the bigger picture there. You can see that primary pattern there, and look at that, right, holding right on the 2/3 there. Beautiful support there. And this is why I'm always touting this market long term is the trade of the decade, essentially the investment of the decade. I think there's a lot of room on the upside, and I think it's definitely a positive here that dollar Swiss is holding that 2/3 support right there. I'll pan out to a weekly chart, give you the big picture, and you have an idea how much room is above that market. Wow, look at that. So nothing's changed here. We still love the Swissy. We think it's pretty significant that, number one, it's holding that support. You got a nice double bottom right on the 2/3. And also, you take your last impulse move down, you had a pretty nice retracement of that. You've actually retraced more than 2/3 of that last impulse move down. So that's a bullish development there. Interesting, if we go back to that flock chart, you can see that the Aussie and the Swissy, the weakest in the flock there, and that would be a sign of dollar strength overall for those two. And you're seeing that also in the individual chart. Next market, the euro. Euro's holding tough, pretty slick chart here. In the euro, you can see your, I guess you'd call that an intermediate term pattern, and then a short term pattern imposed on them. Here, let me get this out of the way for you. Big level in the euro right there at 113.53, similar to 112.20 was a big level there. Couldn't quite get to it, but you had a beautiful swing trade coming out of there. Market it shot higher. You put in a higher high. Like a little bit of exhaustive momentum right there. But this is a big level just below here, so we'll watch that level for a potential swing trade. What's interesting about the euro, as short-term traders, we're still buying dips in there. You're very definitely your 12-day pattern is still up, no doubt about it. Your 30-day pattern is still up. So as day traders, we're buying dips, and as swing traders, we're going to eye this level on the chart, 113.53, for a potential swing trade long. We'll have to keep an eye on that. Dollar index. Here's another cool chart where long-term 2/3 held in the dollar index. You can see that pretty long-term in secondary pattern down, intermediate term pattern down, pretty steep too. But where did it hold? It held 2/3. Pan out to a weekly here. You can see that. So potentially a turnaround on the weekly chart. We'll have to see. You still have resistance up above, but as we've been saying the last couple of times out, that we just see this as a very large sideways pattern. And how do you play a sideways pattern? You get long at the bottom and short at the top. Currently, you're getting long right at the bottom would have worked, but who's to say that momentum and markets being what they are, you can't see lower prices. You can never rule that out. On the other hand, it looked like a pretty good level in hindsight to be a buyer, that big 2/3 level there, just above 92 even. So dollar index, not in the flock, by the way, looking pretty good. Looking pretty good shorter term. We'll have to see how that plays out. You have pretty good resistance just up above right there. That would be an area on the chart where you look to take shorts from both the day trader and a swing trader's perspective, just right around 94 even, just above 94 even. That's going to be a big level. We'll be able to gauge the strength or weakness of that market from how price reacts to it. Next market, gold. Gold also at a pretty big level right there. There you can see it. You have the 2/3 retracement of the 3-year high, the summer of 13 down to the 2015 low, and there it is. You're right on it. Jump out to a weekly chart, and there you can see that box, that long-term primary pattern or grand pattern, whatever you want to call it. We'll have to see. That's a big level. Gold's got to clear 1300, otherwise it's just another bear market rally, albeit a pretty big one in that you went from the bottom of that range all the way to the top of that range. So we'll have to see. But if you can clear 13 even, then you're going to reverse that long-term primary, that grand pattern. And then from both swing trader and more important from an investor standpoint, then you're looking to buy a dip in the gold. So big level on the chart for right now to watch, right at 13 even. Keep an eye on that. Last market we'll cover will be U.S. interest rates. Extremely important market, very influential market. And there you can see rates held that all-important 2/3 level there. You take the low of the year, which was almost 1.55. That'd be the interest rate on the 10-year bond, the 10-year U.S. note. You take that level up to 2% where it topped out there back in March, and you draw a 2/3 retracement and look at, no surprise, that 2/3 level held. So potentially a turnaround in the 10-year notes, meaning rates go higher. You want to see, the Fed wants to see higher rates. Higher rates would be an indication that the economy's on solid footing and growing. Overall, we see pretty good economic growth right now. We think that's going to continue to pick up as weather warms up in the U.S. So that's why long term we're in favor of that big dollar bull holding up. But short term, we take our cues from what the market's doing right now. As Warren Buffett said, he's made all his money going along with what the market's doing right now, not guessing what the market's going to do next, and that's pretty much our MO also. My name's Jay Norris. I teach at Trading University. Thank you so much, and we'll see you next week.